following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. Sorry for the delay this morning. I got to admit to you, I run a lot of things off laptops here. Excuse me. And sometimes when you have a zillion monitors hooked up to laptops with the USB to VGAs and the HDMI ports and all that, it kind of freaks out the computer every once in a while. So that's what happened this morning. So I apologize for that. It's nice to be able to do that, though. And I know there's the OneDrive out there and there's all the cloud solutions, but just to have everything locally on a laptop for some things and be able to travel with it's kind of nice. So that's why I do it. And I know you guys watched the Masters yesterday. I hope you did. What a interesting finish to that. And I got to tell you a story. I didn't catch it. I thought it would be wise, since nobody in their right mind would be on the golf course yesterday afternoon. Everybody would be watching the Masters. I went out and played. It was unbelievable. It was actually crowded because everybody out there had the same idea. And I was talking to people, and they were like, yeah, we thought it would just be completely desolate and we'd play really quick. Wasn't the case. But I watched some of the tape on they're not being very nice to Spieth, I guess. The meltdown is what they're using. They're using it over and over again, but I guess it was a meltdown. We're looking at the Japanese yen right now. Here's the daily situation on this. And we talked about trying to find a bottom and not getting really suckered into some of these short-term ricochet moves back up. And as we look at this, this is our daily on the yen dollar trade. Excuse me, guys. Apologize for that. Here we go. And as we look at this, we always look at the scanner and we try to get some indications, that the trade may be over on the short side. There may be some things to lean on. I'm looking at the yen USD cross right now in the scanner. And, you've got a little bit of a green shoot there on the 60. And, you don't even have an arrow up on the 240s here, even though we're within the balanced area. So what does this kind of gazing across the cell structure mean? That means that it's still a waiting game. And I understand that this could be a little bit of a bottoming action in general. But you really want to see a new profile at least attempt to appear to start taking off any shorts, and at bare minimum start to think that this may be finding a bottom and you may have something to lean against to trade this from the long side. But remember, we talked last week pretty religiously about this hole or gap in profiles, hole in the marketplace. It means volatility is going to be pretty huge in here in general. And then we talked about a chance to pick this back up, possibly. I'm not going to use the term back the truck up, but around 105, 106, that general neighborhood, that would be an opportunity. And if you're going to play that game where we're going to try to pick something up in free fall like this, you've probably got to put your stops below 103. Now, I know that's a pretty big area, 200 pips from 105 to 103. And again, you can be as stingy as you want to, but, we get past 103. I mean, we could actually see some lower numbers. So, again, I know that's a wide stop. I understand that that's probably not a great risk reward compared to trying to rally back up into 112. There's a lot of pain that could happen in 200 pips. I understand that. So remember to put your stops in according to your appetite for risk. And if you want to put some stops in and that gets hit, I'm not saying we're definitely going to go down to 105, but you can try it again around 103. And that's probably, as far as a defense standpoint, a better thing to do. But if you're just thinking that, hey, this yen's going to probably climb back up to 112, you could use that 105 to 103 area as a collection area to try to leg into some longs. And I'm giving you a zillion options, and I'm sorry about that, but that's the way. These bigger moves, you can trade a little lighter, getting your toe in the water. We're expecting some big bounces in this when it happens, and staging into a kind of a position trade, if you will. Sometimes on trades like this are better served. This is not. I mean, you can obviously make a lot of money day trading this right now, but I think the forest for the trees type attitude on this is, we've had a really good pullback. It's astonished the BOJ. There's a lot of people that are getting shoved out of this long trade right now. And it may be something where, we could easily see 112 again in the near future. Somebody's saying they're comparing Spieth to Greg Norman. I think Spieth can get his act together pretty quickly. It's, again, I think we talked about this last week. I mean, when I was 22 years old, I just can't imagine being in that scene and holding it together like he has held it together. I mean, the guy deserves. Has he ever melted down? I think he deserves a break there. This is Canadian dollar. This is the long-term view, weekly view. We're going to stay on some currencies here. Unfair lows around 1.2974. We had that new profile attempt to appear. We've had it, and we're crowding this inflection point. When we look at this, I want to go back and reference the dollar. I'm going to go to another e-signal here. Here's the dollar situation. We talked about the no end in sight. Well, if I can get my charts to work here. Here we go. We talked about the no end in sight situation and no reason to pick any battles here on the long side on the dollar. Therefore, you could see a bounce in the Canadian dollar. That's a kind of a little bit of an inverse relationship there. So as we look at this, and the dollar is comprised of quite a few currencies. Here's the daily. We looked at the weekly. We're going to go in the scanner. Excuse me. I'm going to get a Ricola at the break. Remember those commercials? Ricola. Here we go. The dollar's down here. We don't have any hints of new profiles attempting to appear. You don't even have any green shoots down here. So again, we talked about let's get something to lean on if we're going to try to trade a bounce in the dollar. There's nothing down here, and we're crowding the 240 unfair lows again. So what does that mean for the Canadian dollar? Go back to my currency stage here. All right, so as we go back to the Canadian dollar, here's the 240s. You got 129.65. You've got that 129.74 sitting here, unfair lows on the weekly and the 240s. You had a little bit of a short opportunity there, 131.64 on down. But remember, these weeklies take precedence over dailies, over 240s. And it looks like the U.S. dollar will slide more. I'm looking at a possibility of a little bounce here, even though we've got a crowding action on the bottom of these weekly unfair lows. We're going to come back and revisit this in a second. I'm going to look around a little bit more before we make some hardcore decisions on the Canadian dollar. Let's just leave that alone for a second. Going back to the S&Ps, This 20, 47, 48 general area has been a big area to pay attention to. We're going to talk about that when we come back, and then we'll go back to the Canadian dollar.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to hit the S&Ps really quick and crude oil, and then go back to the Canadian dollar. Even though the Canadian dollar, the reason we're even talking about it is because if you go up here, you'll see bottom right there on the weekly. Just wanted to look at it. Wanted to look at the dollar. We need to talk about crude oil just a bit because that relationship with crude oil is just outstanding when it comes to the Canadian dollar. As we look at the S&Ps, let's hit this really quick before we go back to that. We got our indices heat grid, and we look at our daily, and we're going to hit the Nikkei today too. There's the S&P, still in negative territory on the intermediate. We've had a little bit of a run at the end of get this to work here, Friday. But as we look at this, we're in the Bursa, Malaysia. Hold on. My God, I hate it when my computer freaks out. Here we go. As we look at this, we're going to take a look at our intermediate. We had that, breath crossover, and that was, just pick out the day that happened. 6, 5, 6, 7, we started getting hints of it. And we're going to go back to the chart here. Here's a June contract. So we started getting hints of it actually back in there, which was kind of nice. And then, we've had this kind of go down below, had an outside profile go back down below that 46, 49 area. That big POC on the weekly, I think, is around 46. Let me just clarify that. There we go. I still feel like this has got a chance to completely explore down to 2018. That intermediate is pretty strong on the breadth profile, that aggregate net breadth profile turning negative. If you go back into the scanner and you look at this, you got a lot of stocks in the balanced area, but you do have that heaviness. A lot of them are just kind of clipping along below profiles, 170 of them actually, to be exact. And you've got that POC sitting there at 2046 on the weekly, that top of the mountain. So I think we could get some momentum finally and start looking at this 2018 in a realistic manner. As we talk about that, let's just hit the notes while we're over here. Let's try to put the puzzle together. This is, again, we had that new profile attempt to appear back on the 7th on Thursday, and then we had the rally, which it disappeared. We talked about those profiles and how they appear and disappear if you're using real-time profiles. That's why I like to use these yellow things. So right now, again, if you've got some notes on, long notes, you want to be looking at this seriously. It's an indication to leg out of some of it. And I know we talked about that the other day, but you've got another indication. Those don't happen like that often either, so in a row. So you've got to pay attention to that. Here's the 240s. We're looking a little heavy here. I know we're sitting at the bottom of these 130, 27, 28s, but sitting on support, this is kind of, a chance. If you'd like to buy, you've got an opportunity here, but I'm looking on the short term, but I'm looking at this going, you know what, you probably got better inflection points to pay attention to tomorrow, and you may have something lower to really buy support on. Excuse me. Let's go down to gold. So I think the notes are kind of a non-trade right now. Let's go back to crude. I'm sorry. This is the situation on crude, and we're kind of looking at the Canadian dollar possibly getting stronger. It should have gotten stronger recently. I think it's just been, it should have broken through that 129.74. Here's crude right now. There's the daily. We're getting above that 39.65 profile. But what do you do with this now? I think, again, the stronger inflection points, they're there. 41.31 is a chance to be short crude oil. I think you had a chance to try to pick a battle around 39.65. So you got about almost a $2 range there between the daily unfair highs and the weekly unfair highs. I think we've got some serious resistance here. I'm happy to see crude oil rally so we can short it again, to be honest with you. The dollar's probably going to get a little weaker. That means that crude oil prices could kind of rise by default. So I think this is kind of a waiting game for 41.31 on the May contract. Let's go back to the Canadian dollar. Crude oil going higher is a valuation situation for the Canadian dollar. That means that, we could possibly pierce this. Here's the 129.73, 74 area. Talked about this kind of crowding this area. We're sitting at the bottom. The scanner notified you. I'd be passing on longs on this right now. Crude oil could rally to 41.31. Canadian dollar could just go up just because of that alone. It's kind of, going down just based on that alone. The valuation getting higher, put it that way. And if you look at the 60 minutes, crude's kind of bouncing a little bit here even farther this morning. We're starting to cave in even more, which means that we're becoming more valued. So I think you got to ignore that weekly right now, all things considered, and the dollar getting weaker here. So that's the stance on the Canadian. We're probably just going to pierce that weekly, and crude oil may go higher. And that's that they are the individual instruments that you need to look at relative to this trade. Let's take a look at gold really quick. And we're going to move to the June contract here. Here's the daily. This is the June contract. 1243. Unfair highs on the daily. We're above now. If you look at this, there's not a lot of inflection points to pay attention to here now in the June contract on the weekly. So you've got support at 1243 in gold right now. We've had a breakout this morning, obviously. That's to be looked at as support. And the leverage is to the long side without question. Let's take a look at silver. Are we still in May on silver? Pretty sure we are. That's what I have as a continuous contract. We're going to talk about silver right when we come back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We were finishing up with silver here. Still looking at the May contract. Just be aware of this breakout on the dailies. We're just getting back up into weekly unfair highs around 1578. Gold looks like it, could climb a little higher here, so just be aware of that. If you're looking at this area to short silver at 1578, it's been the laggard to say the least here. But we're at a major inflection point. If you go into the scanner, why are we not printing there? Let me see here. I think that move left us there. Let me check on that. Let me notify someone. Let me write that down. I think silver moved so quickly it didn't register yet. I think did we get there the last 60 minutes? Yeah, okay. Scanner will be notifying us in 2 seconds here. All right, let's take a look at the XLF. When my computer blows up, it throws me for a loop, guys. XLF, we talked about getting back down below 2237. That's the big line. Again, these inflection points in the scanner, 2237. Got notes looking, a little heavy here again. Got to pay attention to that. We're trading 2212 first print this morning. So any rallies, in my opinion, back up to 2237, you can still take a look at that as an opportunity to short. If we take a look at some of the stocks we were looking at that were just showing extreme weakness, Morgan Stanley, still, I think we could easily get back down to 2231 still. Here's the daily on Morgan Stanley. Goldman Sachs kind of shoved some people out of the market on the north side here, but as caved in again, getting back down below 155.02. Again, this is a really good exercise in getting stopped out. Looking at this one, trading around these unfair lows in the weekly, I think you still got to be shorting around 155 and just put your appetite for risk stops in on stuff like this. These are some of the XLF stocks. Let's go into the energy ETF, the XLE. Some of the stocks we've kind of traditionally looked at that have been strong. COG, green across the board again. We looked at HP last week. Let's take a look at that one. I don't think this has performed as well. But again, we're looking for 4 stocks that are the least painful if we're wrong. It looks like we do have a print this morning, 57.50. Here's the reasons we were looking at this from long side. Still really like this trade, and oil could go up to that 41.30, 40 area. Another $1.50 or $2. 56.16. I like the way this is looking still on the long term. Let's look at COG. And again, it's kind of the strong, just continuing to move north here, make new highs. got above 2296, closed above on Thursday, came back and retested. Remember, those are those powerful trades we kind of always look for. Close above profiles, go back and retest 2296, and we're kind of moving forward again. Looks like we have a print no prints this morning yet. Let's look at our buddy SWN. See what's going on here. Started moving again. Again, we talked about this as a pretty low risk trade. Stops below 654 and big time stops below 577. I think oil again still got some legs to it on the north side now. Let's take a look at Chevron, CVX, and let's take a look at ExxonMobil. Here we go. All right, so we talked about a profile appearing below price action. We always talk about those as very bearish, or excuse me, bullish, very bullish indications when we have a profile appear below price action. And I understand this profile edged down from the last one, but that one is bullish in nature. CVX looking like it's spinning around here, consolidating, looking like it's on the launching pad. You've got a print this morning, 96.70. So again, I think you've got an upside here, bare minimum of 97.91. That's top of our profile in the daily. I think we could actually pierce that and get into 100 based on crude going higher. That's my opinion on crude oil. ExxonMobil. You know, we talked about this one, you know, reaching targets around 84 and some change a month or two ago, or three. We were coming off 73.29. We met those, and we just kind of been spinning around here. And you know, the price action right now is not the strongest stock in the world when it comes to the XLE. We're actually trading below profiles, 83.44 weekly unfair low, now 83.36. Again, I think you might have better longs out there than looking at ExxonMobil. I think this thing's looking for oil to get to 41 and some change and then pull back. And you know, this is a stock that is to some degree a lot of times a leading indicator in oil going down and going up. So I think it's saying right now that that oil could be just kind of settling back again. But I think in the extreme short run, oil may be climbing a little bit higher before it does that. Let's take a look at Amazon really quick. You know, I get a lot of emails about this one. We talked about 603.24 being a little bit of a lid here right now, and the possibility that the market may come off a little bit. The broad market, we're trading 597 pre-market. I'm still standing by. I think we could relax a little bit. I mean, even though we're within the middle of a huge, wide fair auction on the long term, on the weekly, I think you got a little bit of a trading opportunity. I think we could explore this entire fair auction back down to 556 with a little market help. But remember, put your stops above 603.24 on Amazon. We're going to go back to the currencies really quick. We're going to take a look at the euro before we go to the next break. Got about 30 seconds. You know, the dollar's looking heavy, folks. The euro, obviously, a little bit of an inverse relationship there. We could have another spike, and Joey and I were talking specifically that it is completely possible if this thing gets going and the dollar starts caving in, obviously, at the same time. 125 is a long-term attainable goal. You've got a hole in the marketplace here. Remember, we talked about that hole in the marketplace on another product we talked about earlier. And it's a similar situation on the euro. We're going to talk about this a little bit more when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're finishing up with the Euro. Got about 4 minutes left here. And again, hopefully tomorrow morning, the computers will all be working right. Let's take a look at this hole in the marketplace we talked about here. If we get kind of clean and clear of some of this congestion from the previous profile, 113.52, and it looks like that's going to happen, and the dollar may just kind of throw up again here. We could have a nice move in the euro still. So again, here's a very small profile, which usually means you're supposed to be trading breakouts on this, not trading against those inflection points to explore the fair auction. These are just conceptual, basic views that I have. We've hit 114.25 and a half, backed off. We reached a high of 114.30. That doesn't mean a lot to me right now. I think the long-term trade is the support at 113.50, that general area. That's the previous weekly unfair high, 113.52, I believe. And this former unfair high on the daily, 113.42. I just think you've got some really good launching pad type action here. You can ignore that 114.25, and I think you just got to trade this from the long side with stops below 113.52 right now. I think this is, whenever I say this, I hate to say it, but this is a very attractive trade to me. Here's the Aussie dollar, and God, don't put this in your retirement account to be long the euro right now. The Aussie dollar, again, that 74 74.39 was a big number. When you have situations like the Aussie dollar and you've gotten above those weekly infra highs and you've used them as support already, you're then looking at those dailies to kind of regulate that trade up even farther. And you're trying to find support. Here's the 75 that it's found recently. You could have looked at, well, hey, what about these areas? Yeah. I mean, what these profiles do is it gives you opportunities to pick battles. And I always talk about letting the market come to us. Again, I mean, you've blocked out the short side of the marketplace, hopefully, by this alone. Now you've got, and I'm showing the weekly here, now you've got a profile that's appeared well below price action. That's bullish. We've already talked about that. And you blocking out the short side of the marketplace and only looking for long opportunities is what this type of methodology gives me. And that makes it easy for me. I'm not the smartest guy in the world, and I really need to know, hey, am I supposed to be buying or selling here? Or in this situation, not specifically here, but that way it kind of, and Joey talked about, leaving some contracts on or leaving one contract on long just to put a stake in the ground that, hey, I'm only supposed to be going long right now. Don't get mixed up, flip the whole position, and then the thing goes the way you thought it was going to go in the long term, and you're short. I mean, it's frustrating. We've all done it. That's why I'm saying it. We've all done it, including me. So again, Aussie dollar spiking here right now in the 60-minute, and we're going to go back to the U.S. dollar really quick. And here we go. U.S. dollar caving in a little bit here. Talked about it looking really heavy. No new inflection points attempting to appear. No new profiles attempting to appear on the U.S. dollar on the daily or the weekly. The dollar clipping below 240s now, breaking down again. Looks like we're in for another ride down on the U.S. dollar. Guys, you've been great. Stay tuned for Larry. Enjoy your day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.